Hey, what's going on, everybody? Hope you're having a good day. As always, my name is Michael and thanks for joining me. So today I want to talk about co-signing on a loan because this is something a lot of people enter into kind of casually, and it's not a casual arrangement to be someone's co-signer. So that's what I want to talk about today, what you need to know to protect yourself and make the best decisions you can. Now, before I get started, I do want to give a shout out to Court Lockett, who's become my most recent Patreon supporter. Thank you so much from the bottom of my appreciative heart. I feel like I've been getting more support on Patreon recently, so again, thank you very much for all of your support. So getting back to the topic at hand, co-signing on a loan, what do you need to understand? Because a lot of people kind of find out that they made a mistake later on and they're not really able to fix it because they didn't know what was going on and how it worked. So first off, let's just describe what a cosigner is. I'm sure all of you guys already know this. Well, a cosigner is really just another individual on a loan application who's needed when the primary applicant doesn't qualify for the loan by themselves. Right? It could be that the primary applicant's credit score was too low. Their debt to income ratio was too high. It could be that they don't have any payment history for the type of loan that they're applying for. Well, if the bank denies them the loan request, the applicant can say, look, I understand that I'm denied the loan, but if I get a cosigner who is qualified in whatever area you need, will you change that to an approval? And yes, that can happen many, many times. It's not guaranteed, right? Just because you have a cosigner doesn't necessarily mean that they're going to approve you, but it does help your chances to have a qualified cosigner. Now, next let's talk about who can be a cosigner, right? Because a lot of people probably think, oh, it's got to be like my mom, dad, grandpa, something like that. And that's not true, right? Anyone can be a cosigner. As long as they're 18 and over and they meet whatever criteria that the bank needs, they can be a cosigner, right? So it could be your brother or your sister. It could be your son or your daughter. It could be your next door neighbor or your best friend. Anyone can be a cosigner. More than likely, it's going to be someone close to you, and I think this is all the more reason to really make sure that you know what you're doing when you get a cosigner, because the last thing you ever want to do is create problems with someone that's very close to you. Now, what I want to talk about next is how having a cosigner can impact your interest rate on a loan, right? Because one of two things is probably going to happen. The first is that you apply for the loan, you get a cosigner, and the bank says, okay, you're approved for the loan, but it's still your credit score that's going to determine the interest rate, right? So let's say that someone applies for a personal loan, right? And their credit isn't the best. Let's say it's like a 550, but their cosigner's credit is like an 800. Well, the bank can still say, look, yeah, you're approved for the loan, but it's your credit score that determines the interest rate. So even though your 800 will get a personal loan rate of, let's say, 8%, you're still going to get a 16% interest rate because it's your 550 that determines the rate. So the main thing to be aware of is that just because you could get a cosigner with a good credit score doesn't mean you're going to get a good loan rate. Now, there are certain banks that will say, yeah, whenever you've got a cosigner, we'll take whoever's credit score is higher, right? And so that's really good when you have someone who has a high credit score, right? Because even though you may not have the best score, their credit score comes into play and therefore you get a better interest rate. So be aware and ask questions when you apply for a loan with a cosigner because not everyone does that second route. Next, let's talk about how having a cosigner affects your credit score, okay? The reason why I bring this up is because a lot of cosigners feel that, oh, I'm just helping someone get approved for the loan. It's not like it affects my credit or anything, and that is not true. It 100% affects your credit score, right? So this is both a good thing and a bad thing, right? Let's say that I get my brother to cosign on a car loan. Right? Well, if I make all of my payments on time and everything's good, well, A, that's going to build up my credit score, but it's also going to benefit his credit score. Or at least it's going to look good as far as payment history is concerned on his credit score, but the reverse is true as well. Let's say that I don't make a payment for 30 or 60 days, right? My credit score is going to tank because of that, and my brother's credit score is in a tank because of that. So it is very important that you really understand how this stuff works if you're considering being a cosigner. Because while you may make all of your payments on time, if this other person screws up just a little bit, it can mean dire consequences for your credit score that you worked really hard to earn. The last thing that I want to say on this particular subject is sometimes parents will kind of rig the system to help their child build credit. Let's say that a husband and wife are buying a car and their son or daughter's in college, right? What they'll sometimes do is put that son or daughter on the actual loan account So that way that, as they pay this loan off and every payment is made on time, well, it kind of looks like their son or daughter has had a car loan in their past and everything's been made on time as well. So that helps build up their credit history. It also helps them when they need a car loan because it looks like they've already had a loan for a vehicle and they've paid everything responsibly as well. So it is something that you can kind of game the system, but it doesn't always work that way because not everyone pays their stuff on time. The next thing I want to talk about is cosigners being responsible for loan payments. Again, this goes back to a lot of people think that, hey, I'm just cosigning on a loan. That's all I'm doing. This is not my loan. I'm not responsible for it in any way. And again, not true. When you are cosigning on a loan, you are saying that I'm willing to step in and make the payments should this person not be able to. This is why the loan was approved in the first place, right? The bank feels that, well, if the original applicant can't meet their end of the deal and make payments, well, guess what? I'm gonna start coming to you, cosigner, and you're gonna start making the payments. So as you can see, all of this stuff is really important, right? You need to know the ins and outs of being a cosigner, or you also need to understand what you're asking someone when you're asking them to be a cosigner. And this gets really complicated when the primary applicant and the cosigner bank at the same bank. So let's say a guy named Tom is applying for a personal loan and is declined, right? But the bank says, well, if you get a qualified cosigner, we'll approve. And so he asks his best friend, Mary, right? They've known each other for years. Mary's got great credit. She will absolutely be willing to be on the loan as a cosigner. Well, what happens 3 months later when Tom unfortunately cannot make the payments and is 30 days late? Well, if they happen to bank at the same bank, that bank is actually going to go into Mary's account and pull funds out of her account. And this is absolutely not a good thing for Mary, right? She just felt like, hey, I'm helping out one of my good friends get approved for a loan because they really need it. Well, because of their inability to pay the loan, now the bank is taking money out of your account, right, without your permission, and they don't really need it because you've agreed to co-sign on this loan. So this really, really is important if every party involved in a loan happens to bank at the same bank. It's not to say it's not a problem if you bank at separate banks, but it's just very, very important to understand what you're doing if everyone banks at the same financial institution. The last thing I want to talk about is taking a cosigner off of a loan. What's involved? Because a lot of people, when they cosign a loan, assume it's a very temporary measure, like I'll be taken off in 6 months to a year, and sure, that can happen, but it's not guaranteed, and you need to know about this stuff, right? So let's pretend that Jimmy, right, is buying a car and he needs his grandma's help getting approved for the loan. She thinks that Jimmy's a responsible young grandson and he's promised her that within 6 months to a year she'll be taken off the loan. Well, what happens a year later when she's actually trying to buy a house and is denied because of her debt-to-income ratio, right? Well, what happened is that she's got her own credit card, she's got her own car loan, she's got all of her own stuff, plus her grandson's car loan. So she decides to talk to Jimmy and say, look, I need to be taken off the loan now because I'm trying to get approved for my own mortgage and this is preventing me from doing so. So Jimmy goes to the bank and says, look, I need to take my grandma off of this loan request so she can kind of do her own thing. And the bank says, no, that's not how it works, because it's not. The whole reason why cosigners exist is because they are needed when the primary applicant doesn't qualify on their own, right? So what has to happen is that Jimmy needs to qualify for this loan by himself. He technically needs to refinance the loan in just his name. So if he applies and everything's good, maybe he got a raise at his job and he's making more money, or his credit score has significantly gotten better, right? Well, if these things have happened and the bank says, yeah, you're approved in the loan by yourself, well then his grandma can be taken off, no problem, easy. But what happens if that stuff hasn't happened? Right? What if his credit score has gone down, or his debt to income ratio is still the same or gotten higher? Right? Well, if she cannot be taken off that loan, that is going to impact all the things that she wants to do financially. So as you can see, making the wrong decision when it comes to co-signing on a loan can mean profound problems for you in your own financial life in the future. Again, it's not to say that you should never co-sign on a loan. It just means that you should understand everything involved when you go into that process. And that also goes for the primary applicant as well, right? You may think, oh, I just need someone to co-sign on a loan. You just sign on a piece of paper. It's no real big deal. it is a big deal. You're actually asking a lot of that person, and because of that, you should do everything in your power to A, manage the loan responsibly, and B, get them off the loan as quick as possible. So that's what I want to talk about today. I hope that helped out anyone that is in the similar situation. Definitely don't forget to like, subscribe, comment, share. Also, if you've got any of your own personal finance questions that you want answered, definitely comment down below and let me know what you want me to talk about. But thank you so much for watching. Take care. I'll see you guys next time. Hey guys, I know I just said this stuff, but let me say it again. Thank you so much for watching this video. I appreciate all the support that you guys give me. And to support you, here's 2 more videos that I've made in the past in case you haven't seen them. Don't forget to share these with your friends and family so we can help all the people achieve their financial goals. Likewise, if there's anything that you would want to see made that you haven't seen thus far, definitely don't hesitate to let me know. But thanks again, take care, and have a good day.